So what are my next moves in the market? Let me start off with the US market. So in my last video, I said that I was looking to take some short positions on the S&P 500 and some long positions on the VIX because it looked like the market could be going down in the short term because it hit this strong level of resistance, trendline resistance starting from the start of the bear market, as well as got rejected off that 200 moving average. And I said that if the market breaks this trendline support, then we could see it hit lower in the short term. But I still expect a Santa Claus rally to bring us higher by the end of the year. Now it happened. So you can see that the SPY, the S&P 500, actually broke that support level. And right there, I took a short position on the SPY using bear put spread options. At the same time, I also went long on the VIX futures. So if you take a look at the VIX, as you guys know, the VIX is the volatility index, also known as the fear index. When the market goes down, people get scared and the VIX goes up. So right here, when the VIX hit this very strong level of support, I bought call option spreads on the VIX futures. So sure enough, the market did go down initially. The VIX went up, so the VIX trade was profitable. The bear put spread options trade on the SPY is slightly profitable, but something happened yesterday. I like to just draw you into the charts. Okay, so again, you can see the break of this trendline support, which is a bearish sign. I thought, okay, it's going to go all the way down, but then something happened in the last 2 days. You can see that we actually had a bit of a bounce. The market bounced back up for 2 days after the SPY bounced off its 100 moving average. You see this orange line over here? This orange line, if you take a look, this was a resistance. It became a support and became a support. So it basically went up, came down, went up, came down. So it's finding support at this 100 moving average. And based on yesterday's price action, it looked like this could actually be heading up. So what I did was I actually closed some of my short positions. I actually took profits on my VIX futures. I closed it for a small profit. It was like about 42% return on capital, which is not bad after 7 days. In fact, you can see me sharing the trade over here, right? So I basically bought this VIX bull call spread, buying the 22 calls and selling the 28 calls, and this was a couple of days ago, right, when it broke down on the 4th of December. Sorry, 2nd of December I went in there. So yesterday I closed the trade, right, closed my VIX bull call spread trades at $1.38, made 42% return in 7 days, right? So why did I close the VIX trades? Because it looked like the market could start going up. Now bear in mind that today when the market opens at 9:30 a.m. Eastern time, you've got the PPI economic data coming out. So if the PPI comes out lower than expected, remember PPI is one of the measures of inflation. So if this comes out lower than expected, the market's going to rally very strongly today. Market's going to go up. Okay, but of course, if the PPI data comes in hotter than expected, then the market could come back down again. And that's why, although I closed my VIX positions, I still have short positions on the S&P ETF, which I will close today if the market starts rebounding back up. I also have got short positions on individual stocks, like I'm short Apple, I'm short Tesla, and a couple other positions. But I'm short using what we call bear call spread option trades, which is really cool because I don't need Apple and Tesla to go down to make money. As long as it doesn't go up, I make a lot of money. I'll show you the trades in a short while, how I structure these trades. So let's wait for this to come out at 9:30 a.m. Eastern time. Again, if this comes out, it shows inflation is moderating, then market's going to go higher. I'm going to close probably the rest of my short S&P ETF positions. Then the next big one would be the 13th of December, which is this coming Tuesday. So we have got CPI data coming out at 9:30 a.m. Eastern time. Now this is a key data point. Again, if inflation comes in weaker than expected, which I think it should, I could be wrong, then the market's going to again rally very strongly. Okay, and if nice Santa Claus rally, but if this comes in hotter than expected, we could go back down again, right? So it's still a bit of a 50-50, but I'm still giving a bit more weight on inflation coming in better than expected, and then the market should rally, but we'll see how it goes, right? So like I said, I still have short positions on the SPY. I also have got short positions on certain stocks like Tesla. I'm short Tesla. I've been short Tesla for quite a while actually, right? Made a lot of money shorting Tesla. And see, the interesting thing is, for example, I use what is known as a bear call spread strategy. Let me just write down. It's called a bear call spread strategy. And you guys who have taken my options classes, you know how this works. So basically, I sell a call option. In the case of Tesla, I sell a call option at 205, and then I buy a call option at 210. So right now, Tesla is about 173, right? So what happens is that in the next 35 plus days, as long as Tesla stays below 205, as long as Tesla doesn't go above 205, I make the full profit, which is say $1,000 per entry, right? But if Tesla goes to 205, I will cut my loss and I'll lose about 1,002, right? So I'm basically betting 1,002 to make $1,000. You may say, why are you betting more to make less, right? Because the nature of these trades is that the win rate is very, very high, right? So my win rate for Tesla or like Apple, which I'm shorting as well, it's about let me show you the win rate, for example. By the way, the win rate can be mathematically calculated, right? So if you look at Tesla, let me show you my trade in the first place. Okay, so this is my short Tesla trade, right? You can see Tesla, bear call spread trade. You can see I entered at about 99 cents credit. Now it's gone down to 72. So it's a small profit right now, right? So the more this drops, the more profitable it gets because it's what we call credit spread trade. So again, I'm short ASML, bear call. Short Apple, bear call. So I'm short a couple of them. Short Amazon as well, bear put, right? So I've got various ways of shorting these stocks. Now, interesting is like Amazon, I own the stock. I'm long on the stock, but I'm shorting the options because long-term Amazon will go up, but short-term it may go down in the short term. So I'll make some money as it goes down in the short term, although it's going to go up in the long run, right? So if you look at, again, my Tesla position, as you saw, by selling the 205 call, let me show you. I'm essentially, this is the January 23rd expiry, which is this one. 13 January expiry. So by shorting that call over here, 205 call, you can see the delta is 22 deltas. So what does 22 delta mean? That means there's only a 22% chance that Tesla will go above 205 in the next 35 days and expire at or above 205. There's only a 22% chance. This is mathematically calculated, right? So that means that I have got a 78% chance that Tesla will not go above 205 and a 78% chance that I'll be profitable on this Tesla trade. So that's the great thing about bear call spread trades. Even if Tesla goes up, Tesla goes sideways, Tesla goes down, I make money. As long as it doesn't go above 205. If it goes above 205, then of course I'll cut my losses, right? So that's the great thing about these bear call spread trades. So all eyes on the PPI data today, as well as the CPI data on Tuesday. Like I said, if the data comes in better than expected, then this support should hold and we should get a nice rally towards the end of the year. But of course, if it comes in hotter than expected, then again, we could break back down again. Okay, we can't predict 100%, so we always go with the flow of the data, go with the flow of the trend. Next, let's take a look at what's happening in China. I mean, it's amazing. Just 30 days ago, what was the media saying? China is uninvestable. Foreigners were fleeing from China. There was panic selling. And that was after the 20th Party Congress, where the Western media, they portrayed Xi Jinping, the President Xi, as this authoritarian that was going to rule for life. And he was only interested in killing his economy with the zero COVID policy, which he had no intention of changing. That's what they said. They said that he's going to kill the economy with the property curbs, with the technology regulations, and on top of that, China was isolating itself from the rest of the world because it was siding with Russia. So all this Western propaganda caused foreigners to panic sell Chinese stocks. You can see this really crazy sell-off right on the 24th of October, right? So Xi's power grab spurs historic market rout as foreigners flee. And if you guys remember, a few days later, on the 4th of November, I released this video, which was this one, right? China's CCP's evil plan. Crashed the stock market in the short term, making everyone think that we are going to kill the economy. And then once the foreigners sell and the mainland Chinese buy, they're going to rebound the markets. And that's what they're doing right now. So it was all an act, right? During the 20th Party Congress, what did they say officially? Oh, zero COVID. They defended the policy is going to last forever. Now, if you recall in this video, I told you guys they're going to phase out the zero COVID policy soon after the Party Congress. And the reason I know is because I've got people on the ground. I've got good friends that are sitting on the boards of Chinese banks. And what they've told me, in fact, I posted this on my chat group in September. You can see this was the 28th of September. And I said, according to my sources in China, plans are already in place to slowly lift the zero COVID policy by the end of the year after the Party Congress. There should be a main catalyst to shift sentiment for the markets there. Now, when I told my students this, some of them said, but Adam, officially they're saying they're not changing the COVID policy. I said, of course they won't say it officially because the Chinese, they want to save face. In front of the world, they have to defend their policy, but behind the scenes, I've got friends working in China at the highest levels of government and enterprise. I've got many friends who are on the boards of listed Chinese companies, and they know what's happening. They know that they are all going to phase it out right after the Party Congress. So you got to know people on the ground if you want to invest in a certain area. So that was the advantage I had. So I made this video and I said that don't worry, all this is for show. And the Chinese people themselves, I said the Chinese people are massively buying the Hong Kong stocks that the foreigners are selling. So sure enough, what happened? Okay, right after the Party Congress, the CCP did a complete 180 degrees and they rolled out all these measures. First thing they said, we're going to rescue our property industry. They've got a 16-point plan to boost the economy. And then, of course, Xi Jinping went maskless at the G20 summit, making friends and re-establishing relations with all the world leaders again. And shockingly, they started to rebuff Russia. Before the Party Congress, he didn't criticize Russia or, they kind of like stood with Russia, right? But once after the Party Congress, once Xi Jinping has absolute control, he wants to, again, remember, China's role is they want to dominate the world economically. So they got to make friends, right? So they spoke out against Russia. They don't want to be isolated with Russia. And of course, the next thing is they started to roll out the zero COVID policy. Everything has come in place and we have had this massive run in Chinese stocks. So far, the Hang Seng Index, as you can see, is up 38%. 38% in just over a month. That's an insane rally, all right? But of course, it's still down for the year. It's still down like 15% for the year. But then again, so is the S&P 500. So, don't be surprised that the China market could actually outperform the US this year and in fact next year. Because don't forget, the Chinese market is very undervalued compared to the US market. And the Chinese economy is going through monetary loosening, right? They're stimulating the economy, which is the opposite of the US, where they're tightening monetary policy. So that's why we've got this very strong rally in Chinese stocks. So the question would be, is this rally in China sustainable? Is this the start of a new bull run in China that could send stocks back to new highs? Or is this just another bear market rally and, it's going to crash back down again? So I've got reason to believe that it is actually the start, potentially the start of a very strong bull market in China, because there's been, again, a shift in the entire sentiment, in the entire policy of the Chinese government. So basically, they are not, they're done with the tech regulations. That's number one. Zero COVID, they are phasing out. They are pumping all the stimulus they can to boost the economy. All right. The only thing that's overhanging is the issue on Taiwan. But so far, they've not been going after Taiwan anymore. So I think they've done this huge shift because they want to get their equity markets to rebound back to new highs. So I think that it is a sustainable run in Chinese equity. So I have been adding, actually I added more Alibaba. If you're in my Telegram Discord community, I shared that I actually entered more Alibaba shares, right, somewhere right at this area, somewhere here, right, when the Hang Seng was about to take off. Okay, so taking a closer look, what has changed? Now, from a technical perspective, what's interesting is you can see that this rally here in February failed. In June, it failed. Now, how about this time? Is it going to fail? Right? I mean, we can't predict 100%. But what's interesting is that for the first two rallies, you can see that it hit the 150-day moving average. The green line came down. Hit the 150 and came down. Now, this time, you can see that on the day, it hit the 150 moving average. Can you see that? It hit the 150 moving average. What happened after it hit? It came down. But then the very next day, boom, it closed higher, and now it's closed above the 200-day moving average. So that's pretty significant. But again, is this a confirmation of the change of the long-term trend? Not yet. Not yet. Right now, this is what I call a short-term uptrend. Right? Wave up, wave down, wave up, wave down, wave up. We could get another pullback. That's only natural, right? Markets don't go up in a straight line, they go through wave patterns. Now, this is a short-term uptrend because the 20 EMA is above the 40 EMA. So that's a signal for the short-term uptrend, but it is not yet a medium to long-term uptrend yet. Now, what must happen for that to happen? For that to happen, we need the 50 moving average, which is the blue line, to cross above the 150 moving average. The moment the 50 crosses above the 150, that confirms the medium to longer term bull market, right? And if this 200-day moving average can start sloping up, then that also confirms the longer term bull run. Now, again, by the time that happens, the Chinese market could be a lot higher than where it is today. But it's still undervalued, which is still worth adding shares, in my opinion, if you're someone who wants to have an exposure to China. All right, so those are my thoughts. Now, one way to gain exposure to the Chinese market is through ETFs that are listed in the US market. One of the most popular ETFs is, of course, the KWEB ETF. KWEB is the Chinese Internet ETF listed on the US markets. And you can see that we've had a significant development on the technical charts. Why? Because again, you can see previously, every time it rallied, it hit a resistance at the moving average 50, failed, hit the 50, failed, hit the 50, failed. Here it hit the 150 and it couldn't break above that 150 moving average. Now this time, it could be different. Why? Because you can see it's on this uptrend, wave up, wave down, wave up, wave down, wave up, wave down. Now what happened over here? Boom, it's broken above the 200 moving average. That is significant. And it pulled back slightly, now it's gone up again. Now, like I said, we need to see now the 200 moving average is actually starting to flatten. Once the 200 slopes up, which I think will happen in the next few days, this would confirm the bull run in Chinese internet stocks. So one could begin to add more long positions if you're interested in China, waiting for a pullback. That would be a nice time to add more long positions on KWEB. Another Chinese ETF listed on US markets would be the GXC ETF. The GXC is an ETF that tracks over 1,000 Chinese companies, the biggest 1,000 Chinese companies listed mainly on the Hong Kong exchange. So again, you can see the price action over here with the strong rally since the lows of the panic selling. And right now, this ETF is right at the 200 moving average again. right at the 200 moving average. So we want to see it break above the 200 moving average. Again, 200 sloping up. That will confirm the bull run in this ETF. Another ETF would be the ASHR. So again, they're all a bit different. KWEB tracks the Chinese internet stocks. GXC tracks all the 1,000 biggest stocks in China, listed mainly on the Hong Kong markets. The ASHR tracks the 300 biggest Chinese stocks on mainland China, which is not Hong Kong, which is Shanghai and Shenzhen. Okay, so again, you can see on this ETF over here, we've got a short-term uptrend, but it hasn't confirmed the longer-term trend yet. Again, I keep saying we need the 50 moving average in blue to cross above the 150 moving average in green, or we need the price to cross above the 200 moving average. We need to see that 200 moving average sloping up to confirm that bull run, which I believe will happen shortly. So those are my thoughts on both the US markets and China markets, and let's see how it goes. If you want to catch my latest videos, click on the subscribe button right now. Click on the bell so you get instant notifications once I upload my latest video. If you want to check out my online courses, go to piranhaprofits.com. We're going to learn how to invest and how to trade the financial markets and create an income from all around the world. If you want to join my live Wealth Academy program, go on to wealthacademyglobal.com and find out more about how you can learn investing and trading live online. This is Adam Khoo, and may the markets be with you.